According to supply managers in the 9 Mid-America states, how is the economy performing?
Our survey of supply managers in the 9 Mid-America states, this is for the month of January, the number dropped significantly. This was a big drop from December's. The number was 56.2 for January, and that's down from December's strong 64.6. Now, approximately 87% of supply managers indicated that they were sustaining transportation delays, and those delays were slowing production. More than 1/3 of the supply managers, that's 1/3, expect supply chain delays to worsen in 2022. So the economy is definitely slowing down a bit, and it's likely to continue to slow, but still positive growth according to our survey. We did have job losses for the month, and that's the first time we've had that since June of 2020. Wholesale price pressures remain very high, and we're seeing that, and I expect because of this, and this is I think the Federal Reserve is going to have to move to raise interest rates before their meeting in March. So I do think the Fed is getting behind the curve, and as a result, they're going to have to raise rates. Let me bring up the graph for the month here, and you'll see there in blue, you'll see the number, and it's dropped, and this is the lowest number we've recorded in many months now. And you see there in red, the red is the national number. It'll come out later on this morning, and it's likely to be down as well. So the message from our survey is that even the national and the regional numbers indicate that the manufacturing sector is slowing down, and the overall economy, regional and U.S., will likely slow in the first half of 2022.
What were the hiring trends?
January number was 43.6, and that's down from December's 59.3. Now that was a significant decline, and again, this is the lowest number we've recorded since the pandemic, the onset of the pandemic in the spring of 2020. U.S. employment is down as well, of course. Now the U.S., both the region and the nation are down. The region's still down about 2.4. The nation, the U.S. economy, is down about 2.3% from pre-pandemic levels. So all of a sudden now, the economy, both economies, that's the U.S. and the regional, are behind the curve in terms of gaining back those jobs. We have not gained back the jobs lost to the pandemic. All nine states for the month of January showed job losses. Now, the largest job losses were in North Dakota, and the smallest job losses were in Nebraska, but nonetheless, compared to pre-pandemic levels, all 9 states remain behind the curve in terms of jobs.
What inflation trends are you noticing?
Inflation was not good. The inflation index for the month of January was 87.5, and that's up from December's 82.7. So we're seeing significant inflationary pressures. All these indices run from 0 to 100, with anything above 50 being growth neutral, above 50 is a growth positive. Still excessive and inflation and heating up. 2/3 of the supply manager reported that deliveries had slowed for the month of January, and of course that's not good. We're likely to see those deliveries and the queue that'll tend to push up prices even more than what we've seen for the month. Both imports and exports declined for the month, so that's something to be concerned about going forward.
What is the economic outlook?
The outlook is for inflation to tick up a bit. I expect it to be cooling now. We're likely to see inflation tick up in the first half of 2022. I do expect it to come down in the second half of 2022. That's excessive. Economic growth will come down but still remain positive for the first half of 2022. We're going to see short-term interest rates rising much more quickly than I expected and most economists expected. The Federal Reserve is going to have to raise rates and have to raise them quickly. I expect at least 1 percentage point increase in the short-term interest rates by the end of the year. That could be even between 1% and 1.5%. Long-term interest rates are likely to not increase as much, but even long-term interest rates are going to be rising, and that'll of course affect mortgage rates. We're going to continue to see supply chain bottlenecks, and that's a real concern. That tends to push up prices as well. Keep an eye on the yield on the 10-year Treasury. That's the interest rate on the 10-year Treasury. When that moves above 2%, and I do expect it to move above 2% in the second half of 2022, that's not going to be good for long-term interest rates, for example, your mortgage rates. Now, interest rates on automobile loans, for example, we're going to see those rise by as much as a percentage point probably by the middle of 2022 and certainly by the end of 2022. I think globally we're going to see global inflation ticking up. Inflation, in my judgment, is remaining too much permanent. Again, it's the idea that this is transitory. Transitory, certainly, I think beyond 2 or 3 years we may see inflation coming back down, but that's going to take some time. And again, I expect the Federal Reserve to raise interest rates before their March 15th and 16th meeting. Now, again, that's the FOMC, the Federal Reserve Open Market Committee that sets interest rates. They're behind the 8 ball now. They're going to have to begin raising rates, and I do expect a rate hike before their meeting on March 15th and 16th of this year. And again, that all in all, it was a concerning report. And again, I expect the economy to slow down. I expect inflation to remain even a little bit higher in the weeks and months ahead until we meet again next month, and that'll be the first business day of March. May your economic cup runneth over.